Keith, I like to think of it as the three faces of George, right? Your analysis of the dollar. Initially, we had the burning buck, then it became the bombed-out buck, and now you're beginning to think potentially bullish buck, and that raises the question that John just raised here, is that can the correlation that we've seen between stocks and the dollar, with the dollar weakening, stocks rising, hold if the dollar goes in the other direction, which is to say begins to strengthen? What do you think?
In the short term, definitely. And, mathematically speaking, the R-squareds are still very, very high, like over 0.8, which, for all intents and purposes means it will continue. And you saw it yesterday. The dollar had a nice big up move because jobless claims numbers were better. And boom, the market goes down. A lot of these reflation trades unwind fairly quickly.
I mean, I know you look a lot at gold. A lot of people was saying that relationship, for example, just as another example, that gold has been rallying while the dollar has not had as much strength as it had. Like maybe that relationship is coming apart a little bit.
Yeah. Actually, you've seen, we've only had 1 week where the dollar's down week over week in the last 7, and actually gold held up in that environment. Everything else went down. So gold's been a real big surprise. A lot of gold bears, rather, have been waiting for that dollar up move to see gold come down. Hasn't happened.
But how long can that relationship continue? Because the factors that would be lending themselves to a stronger dollar, namely the prospects for a rate hike, if we begin to see some evidence of inflation, should lend themselves to higher gold prices as well. But if that happens, then we're seeing a breakdown in that relationship.
Yeah, exactly. Now, that's what people love about gold. It's schizophrenic, it's bipolar, you can win both ways. And actually, I'm perfectly fine with that. But at the end of the day, you're totally right in terms of looking for the Fed as the leading indicator for the dollar. So if all traders are looking for the dollar as a leading indicator for everything else, you got to get ahead of the Fed, and then you'll know where the dollar's going.
Can I ask you, we highlighted some of the other things that investors are thinking about when they decide whether they should buy stocks right now, whether it's cash that companies have or earnings. Outside of the dollar, is there anything that you're watching specifically?
Yeah, I mean, rate policy, though, is really the big one. So, we're looking at a couple big catalysts on the calendar that are actually dollar bullish now. And that's, you could say dollar bullish, you could say economy bearish, you could say China bullish. Obama going to China for the first time is a huge catalyst, and so is the data. So we're starting to roll into some positive GDP data in the U.S. Next week, we get CPI, PPI. That's going to pop up a little bit. So a lot of these different things are intertwined with the dollar.
Key question for you before we go to break. You say the correlation can hold up in the short term. So if the dollar rises, stocks can decline. How long is the short term? What's going to be the catalyst for a breakdown?
Like 3 months or less. When you look at the dollar, you had a 2-year chart. You pull it up 40 years. Basically, the correlation is going to be positive as well. Right. Under Reagan and Clinton, strong dollar policy, like legitimate strong dollar policy, not like this lip service type dollar policy. You can really see these things unwind fairly quickly.